Hello everyone, welcome to this conversation with Harsh Pathak, who is the lead analyst of real estate and building materials at MK Global. This conversation is around our recent initiating coverage report on the real estate sector. Hi Harsh, you recently came out with a detailed initiating coverage report on the real estate space titled The Quiet Strength Behind the Housing Surge. So, what is the core thesis and the key aspects that you would like to highlight as the strength that you are currently seeing in the Indian residential market?
Right. So, setting the context first, we are somewhere in the fifth year of the housing upcycle, and basis the investor concerns and feedbacks we are hearing, given the length of the cycle, we have tried to address most of these concerns in our report. Firstly, we have given an overview of how disciplined this cycle has been. So if you look at the data of the top 8 cities, the unsold inventory overhang of 24 months at the aggregate level, I think that's a very comfortable level right now. And if you see market consolidation so far in FY11, which was the previous peak of the housing cycle, so I think that time the share of the 11 listed players, or maybe not only the listed players, but the 11 major players in the industry, that was around 7%. And that has now more than doubled to 15%. So there's a good consolidation that has happened in the industry. Balance sheets have deleveraged. The net debt of the major players is now down by 65%. If you see the cash flows that are flowing, the collections are now catching up with the pre-sales, at a very healthy pace. So there's a 33% CAGR growth in collections also, and I think the net cash generation in the housing sector has been good so far. Also, if you see, balance sheets have become more liquid now because land as a percentage of your overall assets used to be in the range of 50 to 60% earlier if you look 7 to 8 years back. Now that ratio is also down to 30%. 30 to 32%. So I think the liquidity on balance sheets have gone up, the cash flows have improved. So I think the strength in this particular cycle is far superior than what you have been seeing earlier. And I think the sector is much better positioned than the earlier last cycle, which is giving more strength to the cycle now.
Harsh, since you said we are in the fifth year of the upcycle, how do you see the growth panning out in the coming years, and who do you think would be leading the growth in the sector ahead?
It's a good question, and we have broadly categorized the sector into two main categories. One is those developers having pre-sales below 10,000 crores, whom we categorize as the mid players, and the players having pre-sales above that, we have broadly categorized the larger ones, which are the DLF, Lodha, Prestige and Godrej. So if we analyze the data since the start of the cycle, so FY21 to 25, broadly the 15 listed players which you have mentioned in the report, they have grown at a 37% CAGR. And if you see in the entirety, the large four players have outpaced this average. So it might give you a sense that, so far it has been the play of the larger ones. But, if you break down this complete period into two segments, FY21 to 23 and then 23 to 25. So in the first phase of the cycle, no doubt, the larger ones were leading, outpacing the average growth. But if you see the last 2 years, the smaller ones have started growing better. They have been growing more than the sector growth. So I think since we are also constructive on the continuity of the housing cycle, and many of these mid players have now done a good amount of business development, the new project additions so far, and that pace of new project additions have gone up in the last 2 years. So I think that should lead to the continuity in the cycle, and more so will be led by the smaller players. That's our view.
Okay, so Harsh, developers have done significant amount of business development over the last 3 to 4 years. So what is your assessment around it?
Yes, you are right. So see, developers like Lodha, Prestige, Godrej among the larger names, and even if you take the examples of the relatively smaller players like Aditya Birla Real Estate, Purvankara, Arvind Smart Spaces, Suntech Realty, Rustamji. All of this have also participated in the project additions, and I think that these guys have, I mean, these players have pressed the pedal on the new acquisitions, and this improves the visibility of the future launch pipeline. This also gives us a sense of how confident these developers are on the continuity of the cycle. Also added to that is the continuity of footfalls at the project sites and the inquiries that are continuing to flow in the sector. So I think the pace of increasing business development is gives a positive sense so far, considering the additional parameters that the balance sheets and the cash flows look very strong. So and yeah, the consolidation is also panned out. So I think much better position, and this gives us the future visibility.
So recently some of the agencies have come out with data points that suggest that the housing sales have number of housing units have declined in the recent quarters. So do you see any risk here?
So you are right, even we are seeing this data that the number of housing units sold in the top 8 cities has gone down in the recent quarters. But see, this also has some qualitative reasons. If you see the last 1.5 years, last year we had the general elections, then additionally region wise, the two major markets, MMR and Bangalore, they were facing some region specific issues. Like in MMR there was this NGT related issue, in Bangalore there is still this e-khata related stuff that is going on. So now you see many of these issues are largely behind except for a few, and developers have loaded, like we discussed, developers have loaded many projects as a part of the business development initiative, which should get launched in the coming quarters. And also we are seeing that in terms of new supply that enters the market, the reliance of the absorption on these new launches has gone up. That's what the data indicates. So last 1.5 years, when your new launches were the pace was decreasing, so that is why that trickle down effect you are seeing on absorption also. But we think that since the project additions have been done, and in the coming quarters as these projects get added, these get launched, I think absorption should catch up. So that is in terms of number of units. But even if you see in value terms, we have not seen any decrease in the growth. In fact, last year also when number of units declined, we saw growth in terms of value. And even so far this year, we have been seeing that consistent trend. So I think since we evaluate companies based on pre-sales, we check the pace of growth on the pre-sales number. I think setting the context in terms of market value becomes important, and that's where I think we are still not slowing down.
Now, real estate being a cyclical sector, what if the cycle goes bad?
So yeah, we have also tried and given a view around this in our report, wherein we have analyzed the entire down cycle. So we wanted to take some cues from what actually happens, and we had one of the most painful down cycles we had seen in the last decade. So if you see since FY11, after FY11 till FY21, in terms of number of units, largely they were on a decline, the number of units sold, which defined the housing down cycle. But if you check in the value terms, in FY11 we were at around 2.1 lakh crore of total housing sold in the top 8 cities. If you analyze the entire down cycle between FY12 to 21, somewhere the total value of housing units sold in the top 8 cities remained in the range of 2 to 2.8 lakh crores. So in terms of value, we did not see a decline. Added to that, when I analyze the top branded developers, depending on the micro market to micro market,
whoever had a launchable inventory, they have great market share. So I think, maybe so far the cycle looks good. In case of down cycle, what can happen in our view maybe the market might stagnate in a range. Maybe we have grown now at around 7.3 lakh crore of a market size in the top 8 cities. So maybe it could remain in a range. And in that sense, like we have discussed, many developers have loaded new projects as a part of the business development initiative. So I think now they have launchable inventory. So as and when this get launched, I think even in a down cycle, they should continue to gain market share.
So Harsh, what are the parameters on the basis of which you have evaluated your companies in the sector report? And if you can highlight your top picks in the housing sector, what would be those?
Yeah, sure. So, while most of the developers in our coverage universe are expected to, report a strong growth over the medium term, we believe that based on our assessment, even developers who are not in our coverage right now, but very prudently managed, who have that notchable factor in the portfolio, balance sheets are strong. I think they should continue to do well. However, that said, apart from growth and comfortable balance sheet, to decide the coverage of our sector, we have focused on the net direct cash generation, and we have seen that direct cash generation as a proportion of the overall collections that the developers are focusing. So, basis that we have seen that developers like Lodha, DLS in the large cap space, and among the mid names, Arrange Smart Spaces, Centec Realty, and Overall Realty, they exhibit a superior ratio of your direct OCF generation to collections. So Lodha and DLF, largely in the 50 and above percentage, and Arrange Smart Spaces and Centec Realty largely in the 35 to 40% range and above, even including Overall Realty in that metric. So we have focused very deeply on this particular parameter, and I think that has been on basis that we have funneled down these 5 names which have made
it to our coverage so far. Apart from that, there is Aditya Birla Real Estate and Purvankara, which we have already been covering before the initiation of these 5 companies. So we also continue to like that. So in terms of growth over the next 3 years, between FY25 to 28, we think Lodha developers can continue to grow at 16% CAGR growth, whereas smaller players like Arvind Smart Spaces and Centec can grow in the range, and also considering Oberoi, they can grow in the range of 18% to 35% in the same duration. So the players wherein we see a comfortable growth over the next 3 years, there is a good diversification, there is a prudent management, there is a strong cash flow visibility, and balance sheet strength. We have given confidence, or we have put confidence on these players. So Lodha among the large names is our top pick. We have a buy rating on Lodha. In the mid names, as a part of the IC report, we have given a buy to Arvind Smart Spaces and Centec Realty. Apart from that, the players who were already in our coverage, from that Aditya Birla Real Estate and Purvankara are the 2 names we continue to like, and we have a buy rating on these names.
Thank you, Harsh, for the conversation. It was really insightful. Check out our report to catch up with more information about the companies and the sector. Thank you.